Joining me now for a look into the day's market scene is Annatjie Van Rooyen from Regenesys Business School. Annatjie, thank you so much for your time today. Let's start with oil. I think the last time I checked, it was around $71, $72 a barrel. Perhaps your thoughts on whether it will hold at those gains. Of course, we are seeing this on the back of talks between the US and Iran. Yes, they've ended the third round of talks, but more talks taking place next week. On the back of that, we've seen Sasol rallying. Talk to me about that sector as a whole and how that oil price gain filters through to a counter like Sasol.
Good afternoon, Soleng, and thank you for having me on your show. Yes, indeed, the oil price is featuring right now. Last time I looked, the price of Brent was actually above $72. So the oil market is still in oversupply, so the fundamentals aren't looking healthy. And we also have OPEC on Sunday, and we're expecting to see them increasing production by 137,000 barrels per day. But the oil price currently remains underpinned by geopolitical risk. And this is on the back of those continued negotiations between the US and Iran, while the US military is building up in the Middle East, and this is keeping tensions high. So the uncertainty is based on whether military strikes, if any, will be limited or continue for a sustained period, and whether oil production then will be disrupted as a result of Iran retaliating. So we have seen volatility on the back of the ongoing negotiations because nobody is sure whether there will be a deal or not. But at the current moment, there is no deal on the table, and they will continue into next week. But I think especially before the weekend, people get nervous, and that is pushing this price of Sasol. So it all depends on how they will disrupt this oil market. So, if nothing happens, I see oil pulling back to $60 per barrel. If there is a major disruption to the production of oil, then you can easily see the oil price going to $80, $90 per barrel. But I think for me, what the most important thing is the fact that oil is an important dynamic for inflation.
Yes.
And if there's any escalation, then the gains that we've seen in the rand can easily reverse in the short term.
And that, of course, filtering then through to the local consumer, as we'll probably see those fuel price hikes coming through. I think one thing's for sure, Annatjie, uncertainty remains the name of the game. All right, let's move over to some company news. Netflix walking away from that deal to acquire Warner Brothers' assets. Talk to me about the rationale behind the move. It did seem like a surprise.
Yes, look, the Netflix share price has actually done very well on the back of this. And the reason for this is because they declined to match the Paramount revised offer of $31 per share. And they stated that the latest offer from its rival would have, if they matched that or offered more, it would have diminished the economic attractiveness of the deal. So Netflix will now actually collect a $2.8 billion breakup fee, which provides the company with immediate capital to accelerate its share buybacks. So shares in the company have been surging, and investors approved this decision because now we know that they're not overpaying for a target company. And this decision signals financial discipline and a shift in streaming strategy. The company is prioritizing capital returns and organic development over growth at any cost, which is very positive.
Yeah. Let's look at the precious metals players, particularly Northern Platinum, out with results today. Earnings soaring, revenue also upbeat, and investors will be smiling all the way to the bank with that record dividend. Your analysis there, it does seem like, these precious metal players are in a sweet spot.
Yes, and I think they're going to continue to be in that sweet spot for a while. So this was an exceptional set of results, strongest financial improvement in the recent history of that company.
Yeah.
They reported 60% surge in sales revenue, and obviously this was driven by, luckily, also higher production, but strong PGM basket prices. So operating profit rose dramatically, as you have mentioned, lifting operating margin from 7.5% to 25.1%. That is significant. And these numbers reflect the improved profitability and operational efficiency, but it's all about those higher PGM basket prices.
Mm-hmm. All right, let's get your stock pick. Where are you seeing value at the moment?
I'm going to stick with these PGM companies, and I'm going to go with Sibanye-Stillwater.
Okay, I thought you were going to say Valterra.
No, I think Sibanye is still a bit undervalued because Valterra went up 10% on the day the budget was announced. So I think, investors must just be warned that exposure to commodity and commodity stocks can be very, very volatile. So if you don't have the stomach for that kind of volatility, then this is a no-go. But I'm still thinking that the underlying investment case is very attractive for PGMs and even gold. I think we're not rid of the uncertainty just yet, and that obviously will then result in central banks continuing to buy gold. So I'm still positive on precious metals.
All right, let's leave it there. Annatjie, thank you so much for your time and taking us through trade today. That was Annatjie Van Rooyen from Regenesys Business School.